You know that whole 4-year Bitcoin cycle thing? It turns out it might be dead. One of the biggest names in crypto just said it's over. The crazy part is who's buying Bitcoin right now, because this could change everything. The 4-year cycle is what helped smart investors predictably buy at the bottoms and sell at the tops. It made me and thousands of other people millionaires. But now that could all be over, because we're going to need a new strategy. And stick around because I'm going to explain what is going to happen moving forward at the end of this video. Now let's dive in, because this is an urgent message to all of you crypto investors, because this might be your final shot to build serious wealth with Bitcoin. Let's dive in. So the CIO, the Chief Investment Officer of Bitwise, one of the largest crypto asset management companies out there. They're basically building crypto index funds. And he just came out and said that the 4-year Bitcoin cycle might be dead. And it won't last much longer. Now, who is this guy and why does he have the credibility to say that? So for the past 7 years, I believe Bitwise has been active in the market, and right now they are the largest crypto asset manager out there on the market. So they've built a multitude of different index funds, focusing on different segments of the crypto industry, Bitcoin, innovators, and other kinds of crypto projects. And they also created different kinds of investment products like ETFs, exchange traded funds, which gives you exposure to certain types of assets. And this is their chief investment officer. So this guy basically has the ultimate pick of what Bitwise is going to add to their portfolio and what they're going to be offering to their clients. So this guy, his name is Matt Hougan, and he believes that the 4-year Bitcoin cycle is dead. So he is in control of a lot of wealth right now. He has a lot of connections. He has been monitoring the market and he has been playing at a very high level. And he believes that the cycle is over. So let's explain why he believes this. Well, he said that when Coinbase got launched, it attracted a whole wave of new retail investors into Bitcoin, because Coinbase made it very easy and accessible for people to buy Bitcoin with a few clicks of a button, with a really easy user interface and easy way to manage everything. Then the next cycle, Ethereum, the launch of Ethereum attracted a whole new wave of investors into the crypto market. And then in the previous cycle, we saw the emergence of DeFi, which attracted a new wave of retail investors. And every single wave, we see that new people are attracted into the market. We see new hype. We see a new rally driven by FOMO. Then we see people that are getting over leveraged. And then at one point, we see a big reset and the cycle starts again. Now, this cycle, we saw the institutions entering the market, mainly through ETFs, so the Bitcoin spot ETFs. And he's saying that afterwards, there will not be another massive catalyst like this one, which will bring in a new segment of investors, because we've already attracted all of the investors into the market, including sovereign wealth funds, hedge funds, Wall Street, big banks, and even nation states. So from now onwards, he believes that the market might look a lot different in the next few years. So let's continue with that. Here are some of the reactions based on his statement. So here, this X account is saying, Matt Hougan's take is a bold one. The 4-year cycle, maybe it's time to rethink that playbook. Market dynamics are shifting. Let's keep an eye on liquidity and institutional moves. Here another X reply saying, hey, this could be a game changer. And this could mean longer term growth for Bitcoin and probably a lot less volatility. So a lot less aggressive downside swings. Because this is the 4-year cycle that we have all been looking at in the crypto industry for the past few years. And if you understand this 4-year cycle, then you could have used it to your advantage to make a lot of money. Now, it doesn't matter what asset you're investing in. If you're investing in stocks, if you're investing in real estate, in watches, or in crypto, every asset moves in cycles, bear markets, bull markets. But why does Bitcoin move specifically in 4-year cycles? Well, that has to do with something that we call the Bitcoin halving. What is a Bitcoin halving? Well, the miners are producing new Bitcoin every block of transactions that they're processing. And every 4 years, the Bitcoin block reward gets halved. Right now, Bitcoin miners earn somewhere around 3.1 Bitcoin per block of transactions that they're processing. And in 3 years from now, that block reward will be halved again. And every time we see such a Bitcoin halving, we see a supply shock happening on the market because people realize that Bitcoin is becoming increasingly scarce. And this triggers a supply shock, and this drives Bitcoin to new all-time highs. So here is a recap by Bitcoin J. He's saying the 4-year cycle explained. Bitcoin halves every 4 years. That's what we just discussed. Then we see a supply shock. This triggers a new bull market. At one point, the prices in the market will be completely disconnected from the underlying fundamentals because everything has a real intrinsic value. And when the intrinsic value is too much decoupled from the market value, or that the price that people are willing to pay for it, then the market needs to reset. And oftentimes this happens with a massive blow off top, like we've seen in 2017, or a blow off top, like a double blow off top, like we've seen in the previous cycle in 2021. And then we enter a bear market where everything cools down, the leverage gets flushed out of the market, the whole thing resets, and then we embark on a new bull market again. And this is a cycle that we kept on seeing time and time again in the crypto market for the past 15 years. The last halving was in April 2024, meaning that if this cycle continues and we're going to see, history repeat itself again, then it means that the next peak for Bitcoin is expected somewhere around late 2025. Okay, so if history repeats itself, this will be your best chance to sell before the crash. So what is a game that people play that understand this 4-year cycle? They basically buy at the bottom of the 4-year cycle. So here, every time that this dark surface turns dark yellow, that's generally the best time to buy. And then you want to sell close to the top and buy in at the bottom again, sell close to the top. And if you play this game, you should be able to accumulate a lot more Bitcoin over time, taking advantage of the cyclical nature of Bitcoin that is caused by its Bitcoin halvings every 4 years. So here is a nice chart that overlaps the Bitcoin, a nice chart of the Bitcoin price, which is overlapped by some of the important events that we saw happening in the market. So for example, in December 2018, we saw a massive blow off top. Bitcoin reached an all-time high of $17,000, or according to this chart, $19.5 thousand per Bitcoin. And afterwards, we saw a bear market because people were over leveraged. The market started to tank. People got liquidated. This resulted in a cascading effect downwards and into a bottom forming in 2019. Then we saw a little bit of a relief rally, which lasted until 2021. And then we saw a sequence of positive news coming out, such as PayPal allowing customers to hold Bitcoin, Tesla buying into Bitcoin with $1.5 billion, and a lot of other really great news, which resulted in a new blow off top, the market resetting, and then a second blow off top. And as usual, just like the previous cycle, people were over leveraged, believing that Bitcoin would go only up from there. And then people get liquidated when the market drops just a little bit. That's part of the cycle. Leverage gets flushed out, which results in cascading liquidations, which then results in some structural reset of some big players in the crypto ecosystem. For example, FTX collapsed, Celsius collapsed, BlockFi had some issues too. And then later in 2023, we saw that the good news started to come out again. BlackRock applied to launch a Bitcoin spot ETF. When the SEC approved all of the Bitcoin ETFs, then suddenly the market started to pump. Then we saw the Trump election, or Trump getting elected as the next president of the United States. And then the market pumped from there onwards. Now we saw a little bit of a reset in Q1 of 2025. And in Q2, we're seeing that Bitcoin is moving towards a new all-time high. So here you see basically a snapshot of 2 different Bitcoin cycles in a period of, what is it, roughly 8 years. So every cycle is 4 years. If you take 2 cycles, that's 8 years. And the question is, are we going to see another blow off top and then a bear market and then another bull market, or are we going to see a change in the market dynamic from here onwards? That's a big question. So this time the cycle might actually be broken, and the bull market could last a lot longer than anyone expects. Here is why. So Wall Street advisors have quietly bought $10 billion of Bitcoin. So here you see a tweet of Bitwise, remember the asset management company of which the CIO we just talked about in the introduction. So here's an excerpt from Bitwise Chief Investment Officer Matt Hogan, his weekly memo to investment professionals. Bitcoin ETFs have attracted more than $7.5 billion in new net assets since launching in the US on January 11, making many of them amongst the most successful ETF launches of all time. The top question on everyone's mind is, who is buying them? Retail or professional investors? One of the great promises of the Bitcoin ETFs was that it would open up the Bitcoin market to professional investors. So has it? The answer is yes. Over the past 7 weeks, we at Bitwise have heard from each of the following groups that they are buying Bitcoin ETFs. Individual retail investors, registered investment advisors, RIAs, family offices, hedge funds, venture capital funds, asset managers. Those are all buying Bitcoin right now. So here is another article by Blockworks saying that financial advisors are increasingly allocating to crypto. So more respondents report concerns about regulatory uncertainty and volatility compared to a year ago. So this was in January 2022, which is a long time ago from now, 3 years ago. But already then, financial advisors were interested in crypto, but the big problem that they had to address was all of the regulatory uncertainty, because the SEC under the Biden administration was attacking crypto projects and companies left and right. Here is an article by the Coin Republic. The bullish inflows into Bitcoin ETFs has persisted. It recently hit a 6-month high. Here, Bitcoin ETF demands hit 6-month high. So spot Bitcoin ETF products have seen the demand boost to a 6-month high. BlackRock is a clear dominating platform funneling most of the inflows. Top banking giants and institutional investors are now embracing the asset class. Well, a lot of that also has to do with the fact that, we saw the SEC approve Bitcoin spot ETFs. So this legitimized Bitcoin as an asset class. We saw big names like BlackRock attach their name to and their name and reputation and track record to Bitcoin, which further legitimizes Bitcoin. And not only BlackRock, but also other asset managers out there like Fidelity, Invesco, and other large asset managers that are managing trillions of dollars and that are like household names within the investment space. On top of that, we also saw, of course, the Trump administration, which came out with a bunch of different executive orders, which further legitimized the crypto industry within the United States and also globally. So this removed a lot of the uncertainty and allowed for bigger institutions and players to step into Bitcoin as an asset class. And now we're seeing that sovereign wealth funds and even entire countries are getting into Bitcoin. So here you see the United States holds around 208,000 Bitcoin. The United States, 61,000 Bitcoin. China, 15,000. Bhutan, 12,000. El Salvador, 6,000. Norway, somewhere around 3.4 thousand. But Norway owns a lot of MicroStrategy, which is a Bitcoin proxy company. North Korea actually owns 1.5 thousand Bitcoin, which they probably acquired through hacking people. Switzerland, 500 Bitcoin. Venezuela, 240, and then it goes lower and lower. Now, it's interesting to see, because right now we're actually seeing that many of these countries are adding to their positions, either by buying up Bitcoin, buying exposure to Bitcoin through Bitcoin spot ETFs, or companies like MicroStrategy, which are basically Bitcoin acquisition vehicles, and finally mining Bitcoin. So Bhutan, for example, is mining Bitcoin. And here you actually see an update about Bhutan. So Bhutan unveils the world's first national crypto tourism payment system after selling $248 million worth of Bitcoin. So so Bhutan is very heavily embracing Bitcoin. They're mining Bitcoin. They're allowing tourists to pay in Bitcoin. So they're really embracing it. And El Salvador's Ministry of Education is going to launch educational Bitcoin curriculum for young school students. So I think that's really amazing, because one of the best ways to get people to understand how Bitcoin works is to teach it to them at school. So here you see, for example, school books teaching people about money. So here is this person holding paper money, fiat money, $1, and he's saying, this is money. And here you see a child holding a toy, and he's saying, no, this is money. And here you see another character holding gold, and that person says, no, this is money. And here you see a question, who is right? So with my limited Spanish, I understood this example. But money can mean different things to different people and to different groups, and you have different types of money. But if you ask me, Bitcoin is the best type of money, at least over the long term. You see, over the short term, Bitcoin's price volatility makes it not a very great payment method. But if you're willing to hold on to something for the long term, let's say multiples of 4 years, then I would rather hold my wealth in Bitcoin than in dollars. And I think it's really great that they're teaching people about that. Now, Bitcoin allocation is becoming a corporate arms race as well. We're seeing all of these Bitcoin acquisition vehicles that are being set up left and right. So here is an example, Metaplanet, which is a Japanese publicly traded Bitcoin acquisition vehicle, has now established a subsidiary in the United States. Why the United States? Because right now the United States has the biggest capital market in the world. And this allows them, exactly what I said, this allows them easier access to the largest capital market in the world. So now you have Michael Saylor through MicroStrategy, Jack Mallers through 21 Capital, and Dylan Leclerc, which is on the board of Metaplanet, which are all building Bitcoin acquisition vehicles and coming out with these financial instruments that will allow them to acquire as much Bitcoin as possible while it is still cheap. So all of these entities, and they're not the only 3 entities out there. You've got many entities like Semler Scientific, which are, and many more corporates which are now adding Bitcoin to their balance sheet, which are now all racing to acquire as much Bitcoin as possible. So all of these are going head to head to stack as much Bitcoin as possible for their shareholders using various securitized Bitcoin products. So the next few years are going to be a movie, exactly. And I'm going to sit here with my popcorn to enjoy the markets. Remember, the markets can go up, they can go down. It doesn't really matter on the short term. The most important thing is that you zoom out and understand the longer term trajectory. There has never been a more bullish time than right now. And if you want to stay in touch and up to date about everything that's happening, then make sure to like this video and subscribe to my channel, because I'm going to be here with you in the trenches, helping you to make sense of everything that's going on, to help you to maximize your profits as a crypto investor. Now let's continue. So strategy is doubling down on buying Bitcoin. So last week they came out with the announcement that they're going to double their price. So basically they came out with a target early this year, or what is it, Q4 last year. It was called their 21-21 plan. So they were going to raise $21 billion of capital on the equity markets and $21 billion of capital through the debt market. They have already raised a very significant chunk of that. They were planning to do that within a 3-year time span, but already within 1 year, they're halfway through that target. And they basically want to raise more. So instead of raising $42 billion of capital, they want to now raise $84 billion of capital. Sorry, yeah, 42 billion, and now they increase it to 84 billion. So that's a lot of money, guys. That's 84 with 9 zeros behind it. And they're going to use all of that money to buy up Bitcoin. So all of that money is probably going to flow into the Bitcoin market. And that's going to put a lot of buying pressure on Bitcoin. And the nice thing is that Michael Saylor and MicroStrategy, they're paving the way for many others to follow. They are the pioneers. And they're showing to many other corporations that it is possible to accumulate Bitcoin through genius financial engineering. All right, they are actually measuring the success of their company with a KPI that we call sats per share, satoshis or fractions of Bitcoin per share of MicroStrategy stock. And if they're doing everything well, then the number of Bitcoin per stock should actually increase over time. And that's the reason why actually MicroStrategy is trading at a much higher multiple compared to the value of the underlying assets of the company. Because people are believing that MicroStrategy and Michael Saylor can come up with all of these creative ways to accumulate more Bitcoin for their shareholders. And actually one of their ultimate game plans is to build the world's first Bitcoin bank. I mean, I would rather deposit my Bitcoin with MicroStrategy that has hundreds of thousands of Bitcoin under management and understands Bitcoin in the deepest possible way, rather than a traditional bank who is just adding Bitcoin products because they want to make a little bit of extra money, but they don't really understand or fully back the product yet. So I believe a lot of the next growth for Bitcoin will be due to the fact that less people will be selling Bitcoin as well, because instead of having to sell your Bitcoin to buy a house, you can now deposit it at a financial institution to borrow money against the value of your Bitcoin. So you no longer have to sell your Bitcoin anymore. So with less Bitcoin that will be out there on the markets and more demand for it, it usually means that the price will go up. So here, Jack Mallers, CEO of a company called Strike, one of the biggest Bitcoin apps out there, and in combination or in collaboration with Tether, SoftBank, and Cantor Fitzgerald, have recently come out with their own Bitcoin acquisition company called 21 Capital, and they already had 24,000 Bitcoin in their treasury. Here, Metaplanet, a decade-old Japanese public company, is considered the MicroStrategy of Asia. And Dylan Leclerc, which is one of the famous on-chain analysts, he has a really great reputation within the crypto space. He is a director of their Bitcoin strategy. So again, they are building these dream teams of people and backers, which allow them to just go head on and acquire Bitcoin. And in the background, the regulatory environment is starting to look better and better. Grayscale's 2023 lawsuit opened the floodgates for ETFs. So this whole ETF approval wave, which happened last year, all resulted in the fact that Grayscale, which is another asset manager, they had a Bitcoin trust, and they wanted to convert this Bitcoin trust into a Bitcoin spot ETF. So they basically wanted to do this, and the SEC came out and sued them. And they came out with a bunch of different reasons why Grayscale was not allowed to basically convert their trust into a spot ETF. This put a lot of pressure on Grayscale, but it opened up the floodgates for other Bitcoin spot ETFs to come out. And now Grayscale won against the SEC, or at least it isn't definitive, but it certainly increased the probability of other ETF approval. So this was a tweet in 2023. So this is old, guys. This is pre-Bitcoin spot ETF approval. So Grayscale was the first one to enter this space. They went into a big lawsuit with the SEC. Over time, they started to come out victoriously, and this opened the floodgates for other ETFs to follow. And now, in 2024, we saw that BlackRock and a bunch of other ETFs got approved. And here you see so much money is flowing into Bitcoin because of these Bitcoin spot ETFs. If I'm right now, Bitcoin spot ETFs are already holding around $1 million Bitcoin. And that's a lot if you take into account that there's only ever 21 million Bitcoin that will ever be in circulation, and maybe around 1.5 to 3 million Bitcoin are lost and will never be found. So in reality, the supply is a lot smaller, maybe 19.5 million Bitcoin or less. And right now, these Bitcoin spot ETFs are gobbling up Bitcoin left and right. So Fidelity joined BlackRock in the race for Ethereum ETF. So why did I add this in? Because they're not only going for Bitcoin spot ETFs, they're not only acquiring more Bitcoin, but they're also acquiring Ethereum, Solana, and other projects. Basically, this shows that the traditional investment world is now merging with the new world, the new disruptive world of blockchain, okay? For the past 15 years, these two worlds have been separate. The big money is within the world of traditional finance, the institutions, the banks, the hedge funds. But they didn't want to buy Bitcoin yet, and they didn't want to buy crypto yet because it was too uncertain. There wasn't any proper regulatory framework in place. But now there is, and now these big guys are getting in, and this bridged the old world with the new world, allowing billions of fresh capital to flow into the market. Okay. And right now, Bitcoin isn't just retail hype anymore, because for the past 15 years, Bitcoin was a retail asset, meaning that the average investor like you and me would put their savings in Bitcoin and it would pump and we would talk about it with our friends. But now Wall Street is getting into the game. The large banks, the large institutions, the professional investors, the financial advisors, now they're all getting into the game, which is really amazing. I mean, we got so far from where we were 15 years ago, and this space is here to stay, and it's only going to grow from here onwards. So we have Wall Street, 𝗗𝗶𝘀𝗰𝗋, which is basically the perfect example of retail investors. So Wall Street Bet is a forum on Reddit, and you have all of these retail investors sharing their investment thesis and their investments and their results. And then we have institutions like Franklin Templeton and Elon Musk with Tesla and SpaceX holding Bitcoin. So yeah, it's going to be an interesting an interesting few years ahead. And I believe Bitcoin is going to appreciate so hard from here onwards. I keep saying it in every single one of my videos, but I believe Bitcoin is still dirt cheap. So nearly half of the institutional investors see a place for digital assets in their portfolio. So this is a research by Fidelity, one of the largest asset managers out there, and this is their digital assets branch. So 32% of all of those respondents see it as a part of an alternative asset class. And okay, right. So within portfolio management, you always have like a section of alternative investments. So 32% of all respondents see crypto as part of that alternative investments category. But 15% see crypto as their own investment class, which is just a start, guys. This industry is still young. We've only been here for 15 years, and most of the adoption has happened within the past year. So this is going exponential. So if we see this questionnaire in a few months from now, or a few years, then probably these percentages will be a lot higher. And the US election changed everything, because Donald Trump and his administration are also making strides to legitimize crypto as an industry. He signed executive orders left and right. He put in special committees in order to help form the right legislation to help this industry to flourish. He said it on stage at Bitcoin 2024. He wants to make the US the crypto capital of the world. And yeah, he's putting in a lot of effort to do so. And his Treasury Secretary, Howard Lutnick, is very embedded in the crypto industry. His company, Cantor Fitzgerald, actually is one of the backers of this new Bitcoin acquisition vehicle called 21 Capital. So yeah, that says enough about his involvement in the crypto industry. So ETFs are live, pro-crypto leaders are in, the fuel is lit, it's now time for the spaceship to take off. So reports are saying that spot ETFs can see $14 billion of inflows in the first year. Well, that was 2023. Here, Bitcoin more than doubles in 2024 on spot ETF approval and Trump euphoria. And guys, this is not just another cycle. This time, it could be game-changing. There could be a lot more money flowing into Bitcoin because the old world and the new world have been bridged. So here, another tweet by Mark Harvey. The 4-year Bitcoin cycle is dead, in my opinion. This time is different because MicroStrategy is buying the entire new supply. So Bitcoin spot ETFs and publicly traded companies are buying multiples more Bitcoin every single month than the number of Bitcoin that's being mined. So if you ask me, demand is much larger than supply. And we don't only have MicroStrategy, but we also have many MicroStrategy copycats like Metaplanet, like 21 Capital, like Semler Scientific, like all of these companies that are copying Michael Saylor's blueprint. Nation states are now buying and establishing Bitcoin reserves. And all of these players that we're now talking about, they don't have a short-term perspective. So when the market dips a little bit, they don't directly panic sell because they don't need to. They're not in a rush to sell. They're not here to make money tomorrow, but they're here to make money within 4, 8, 12, whatever, 20 years. They have a longer-term trajectory because they're experienced in the market cycles. These are generational shifts because baby boomer money is also coming in through ETFs. So one of the biggest obstacles that the baby boomers had, which is now the wealthiest generation in alive, is they don't want to work with all of these complex crypto exchanges. That's all too difficult and too complicated for them. They want to work through their existing stock brokerage platforms. And now they can get exposure to Bitcoin with just a few clicks of a button through an ETF. And also we have this massively pro-crypto administration in the US for the next 4 years. And this, if this thesis holds true, which is shared by many different crypto analysts out there, might mean that now we might not see another 4-year cycle. Instead, Bitcoin might behave more like a Google stock or Amazon stock or like one of those tech stocks, which just slowly, gradually goes up in value over time. And there's not like another 1-year bear market, 3-year bull market, 1-year bear market, 3-year bull market. Instead, it might just be a longer-term bull market with a few dips along the way. So I'm really curious to hear your thoughts in the comments below. Let me know your thoughts. Do you believe that the 4-year cycle is broken, or are we going to see another repetition of the 4-year cycle? So John Davey is saying you can't deny that the role that Bitcoin has played in this tariff temper tantrum. Year to date, the SPY, which is the S&P 500, has been down minus 14%, while Bitcoin was down minus 3%. Well, this is a tweet from the 22nd of April, so this is outdated. Right now, Bitcoin is up already a lot more. So I would say Bitcoin is up almost 20%, while the stock market has not recovered that much. So here, again, so this is a tweet of April 23rd. So gold and Bitcoin were soaring, while the stock market isn't recovering that quickly. So that's also showing how big the demand for Bitcoin is right now. People are basically flocking to hard assets, things that the government can't simply create more out of, because money can be printed out of thin air, more buildings can be created, more stocks can be issued, more bonds can be issued, but you can't create more than 21 million Bitcoin. So Bitcoin is rallying because they broke the economy. And the way they'll fix it, the economy will make Bitcoin rally harder. In other words, they will probably print more money, and more money printing and lower interest rates will probably pump Bitcoin even harder. All right, hey, thanks for watching this video. I hope you got good insights out of it and that it gave you a lot more perspective currently on Bitcoin and the wider market. If you enjoyed watching this video, smash the like button, subscribe to my channel. I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on. And if you enjoyed this video, then I'll see you in the next one. Take care, peace out, and have a great day.